All right, let's get ready to talk tickers because we're diving deep into Full Truck Alliance's Q4 2024 earnings call.
Yeah, their ticker symbol is YMM if you want to follow along at home.
Now, think of them like the Uber of trucking in China, but there's actually so much more going on under the hood.
It's fascinating how they're using technology not just to connect truckers with shippers, but to actually make the entire logistics chain way more efficient.
And that's exactly what we're going to unpack for you today. Their operational highlights, financials, and where they see things going in the future.
Plus, we'll sprinkle in some insights on what it all means for investors like you.
Sounds good to me.
All right, so first, let's hit the highlights. Full Truck Alliance saw some serious growth this quarter.
I'm ready.
Their revenue hit 3.2 billion RMB, which is a 32% jump compared to the same time last year.
Wow, that's a pretty eye-catching number. But Todd Ticker listeners always want to know what's behind the numbers, right?
Oh, absolutely. One of the big drivers is that the number of orders they fulfilled shot up by over 24%.
That's a lot of goods moving across China thanks to their platform.
It really is.
And it's not just about the sheer volume. Their fulfillment rate hit a record high of 37.5%.
That's right.
That means they're getting really good at matching those orders with available truckers.
Exactly. It's all about making that process as smooth as possible. And a higher fulfillment rate means happy shippers and happy truckers.
It's a win-win.
Exactly.
Now remember, they're doing all of this within China's economic landscape, which can be a bit unpredictable sometimes.
Right. And while management did acknowledge some potential headwinds, they're still projecting growth for 2025.
Okay, interesting.
They anticipate order volume to increase by at least 15% next year compared to this year.
So I guess you could say they're cautiously optimistic, which honestly is probably a good approach given all the uncertainties.
Yeah, it makes sense.
Okay, so we've got the big picture now. Let's zoom in and break down their financial performance.
Let's do it.
First up, their transaction service revenue, which is basically the commission they earn on completed orders.
And that segment saw some huge growth, surging over 70% year over year.
Wow, 70%. That's huge.
Yeah, they're definitely finding ways to make money from their platform more effectively.
Okay, I like it.
One thing that really stood out to me was their monetized order penetration ratio. So basically, this tells us how many of their total orders are actually generating revenue for them.
Yeah, it's all about making money, not just moving boxes.
Exactly. And that number jumped to almost 83%, which is an 11-point increase from last year. So not only are they doing more business, they're doing it more profitably.
Okay, now that's what I like to hear. It's a smart strategy.
It is.
All right, so transaction services are booming, but what about their other revenue streams?
Well, their freight brokerage business, where they actually directly manage shipments, saw some interesting dynamics.
Like what?
So revenue did grow, but mostly because they strategically increased service fees.
Okay, so they're being a bit more selective about the business they take on.
Yeah, and it gets even more interesting because they also mentioned that they're actually scaling back the volume of this freight brokerage business.
Really? Why would they do that?
Well, they cited changes in tax regulations and some concerns about risk management as factors.
So, like, they're recognizing that this business has been good to them.
Yeah.
But it might be time to shift gears a little bit.
Exactly. They're seeing more potential and higher profit margins in their tech-driven transaction services.
It's like they're saying, we're a tech company, first and foremost.
Right.
And that's where we're going to make the biggest impact.
Exactly. It's a really deliberate shift in how they make money.
Makes sense.
Yeah.
So they're leaning into their strengths, letting the platform and algorithms do the heavy lifting. It's all about that network effect, right?
Precisely. More users leads to more efficiency, which then attracts even more users.
It's a beautiful cycle.
It really is.
Okay, so we've covered those two. What about their less-than-truckload segment?
Yeah, or as it's often called, LTL.
LTL.
Yeah.
What's happening there?
Yeah. So think of LTL like carpooling for cargo.
Okay, I like that.
It involves smaller shipments that are combined onto trucks to make everything more efficient.
That's smart.
And management noted strong momentum in this segment, particularly with their LTL carpooling model.
I love that analogy.
Yeah.
It makes so much sense. Bundling smaller shipments together saves space on the trucks and probably saves everyone money.
Exactly. They're basically taking the same technology-driven efficiency that they've mastered with full truckloads, and they're applying it to the LTL space.
Very cool.
Yeah.
And is that resonating with customers?
It seems to be, especially with smaller and medium-sized businesses who are always looking for ways to save money on shipping.
Yeah, that makes sense. It's a huge market in China.
It is.
All right, so we've covered their main revenue drivers. Let's talk costs. Did anything jump out at you there?
Yes, actually, a couple of things. First, they had a little bit of a setback with an impairment loss of 350 million RMB this quarter.
Ouch, what happened there?
So it was related to an investment they made in an auto parts e-commerce platform a while back, and it didn't quite pan out the way they hoped.
It's business sometimes.
Yeah, it happens, but they were very clear that this was a one-time event related to an older investment, and they emphasized their commitment to managing their investments more carefully in the future.
Yeah, let's hope there are no more surprises like that.
Agreed.
Yeah.
What about their day-to-day operating expenses? Are they showing any discipline there?
Yeah, that's always a good sign.
Well, they've actually been quite focused on controlling those costs, particularly in sales and marketing and research and development.
So they're tightening the belt a bit.
A little bit. They've streamlined some processes, adjusted headcount, and are trying to get more bang for their buck.
Okay, I like that it shows that they're not just blindly chasing growth, but building a more sustainable and profitable business over the long term.
Right, and you can actually see that reflected in their adjusted operating income, which jumped over 140% year over year.
Wow, that's impressive.
Yeah, they're clearly using their efficiency and cost management to boost their bottom line.
Smart. All right, so we've got a good grasp on their financials. What are the key takeaways we should be considering as investors?
I think the biggest one is that Full Truck Alliance is proving they can navigate a tricky and unpredictable market.
They're not just surviving, they're finding ways to thrive.
Exactly. They're not immune to economic pressures or changes in regulations, but they're adapting and finding ways to come out on top.
They're rolling with the punches.
That's one way to put it.
But it's more than just surviving, right? They're finding ways to thrive in a challenging environment by really focusing on what makes them different.
Absolutely.
Their technology platform, their massive network of users, and their incredible operational efficiency.
That's a great way to sum it up. They're not just a trucking company, they're a tech company that's revolutionizing the entire logistics industry.
Yeah, and that's a compelling story, especially as the global supply chain continues to face all these disruptions and as digitalization becomes even more critical.
It really is. It's like they're in the right place at the right time with the right tools.
Absolutely. But are there any potential risks investors should keep in mind?
Of course, as with any company operating in China, regulatory uncertainties are always something to watch.
Yeah, the government's stance on tech companies, data privacy, and the transportation sector can change pretty quickly, and that could definitely have an impact on Full Truck Alliance's operations.
It's a good point. Investors need to stay informed about the regulatory landscape and think about how any changes might affect their business model.
Definitely. Another thing that comes to mind is competition.
Right.
While Full Truck Alliance is the leading player in China's digital freight market, there are other companies out there who are trying to grab a piece of that pie.
Yeah, and some of them are backed by some huge tech companies, which could lead to some pretty intense competition and put pressure on everyone's profits.
It's something to keep an eye on for sure, especially in a fast-growing industry like this.
Definitely. And finally, let's not forget about those bigger economic risks.
Hell, like what?
Well, China's economic growth is slowing down a bit, and there are those ongoing global trade tensions.
Right, those are always in the background.
And those factors could potentially affect the demand for freight services and had an impact on Full Truck Alliance's overall performance.
So it sounds like investors need to weigh the potential rewards against the potential risks.
Always.
But overall, Full Truck Alliance seems to be in a pretty good position for long-term success, even with those challenges ahead.
I agree. They've built a solid foundation. They're clearly adapting to the changing environment, and they're laser focused on profitable growth.
Okay, so we've covered a lot of ground today. But before we move on, I think it's time for our favorite segment. This is not financial advice.
Of course, because we're all about giving you the information, not telling you what to do with it.
Right, we're not in the business of giving financial advice.
But sometimes it's fun to put on those creative hats and brainstorm some outrageous yet plausible trade ideas.
Yeah, just for fun.
Exactly. So imagine you're pitching an idea to a hedge fund's investment committee. What's an out-of-the-box trade that could capitalize on Full Truck Alliance's unique position in the market?
Okay, let me think. How about this? A long-short pairs trade, betting on Full Truck Alliance to outperform a more traditional, less tech-savvy logistics company that's operating in a similar market.
Interesting.
It's essentially a bet on the future of logistics, where you're long on innovation and short on stagnation.
I like it. You're betting on Full Truck Alliance to continue disrupting the industry.
Exactly. And to make things even more spicy, you could throw in some option strategies to maybe boost those returns or add a macro hedge to try to minimize some of those China-specific risks.
Now we're talking. But remember, folks, this is purely hypothetical. We're just trying to get those creative juices flowing.
Right. Definitely not financial advice.
Not at all.
But it does show how Full Truck Alliance's story can fit into a bigger investment picture where you're taking into account both the company's performance and what's happening in the wider world.
It's all about connecting the dots, just like Full Truck Alliance connects shippers and truckers.
I love that analogy.
Yeah.
All right. So there you have it, folks. Our deep dive into Full Truck Alliance's Q4 2024 earnings call.
They're performing well, they're navigating a complex landscape, and they're making some strategic moves to capitalize on the digitalization of logistics.
It's a company worth watching, that's for sure.
Absolutely. Yeah, it's a company definitely worth keeping on your radar. But let's shift gears for a moment and talk about some of the strategic moves Full Truck Alliance is making to kind of like solidify their position and drive future growth.
Yeah, let's unpack that.
Well,
What are they doing to stay ahead of the game?
one thing they really emphasized on the call was their commitment to technology and innovation. They're investing heavily in AI and machine learning to really like enhance their platform.
So it's not just about connecting those trucks and shippers, it's about using technology to optimize the entire process, right?
Exactly. Making it smarter and more efficient.
And AI, I mean, that's kind of like the buzzword of the moment.
Yeah,
Everyone's talking about it.
It really is. And they're using it to improve everything from freight matching and demand prediction to route optimization. They're even using AI to help truckers find the highest paying loads. It's all about taking all that data and turning it into actual insights that people can use.
Data is king or queen or whatever.
Right. And they're not just focused on those internal improvements either. They're also exploring some pretty interesting partnerships to expand their reach and offer new services.
So they're not afraid to team up with others to achieve their goals.
Exactly.
Okay, I like that. Do you have any specific examples?
Yeah, they talked about working with LTL dedicated lines, which are basically companies that specialize in specific routes or types of LTL shipments.
Okay.
And by partnering with these companies, Full Truck Alliance can offer a much wider range of services to meet different customer needs.
It's like they're building this whole ecosystem,
Right?
bringing together these different players in the logistics chain to create a smoother and more integrated experience.
That's a really good way to put it. They're positioning themselves as that central hub that connects everything and everyone.
Smart move. So we've got those tech investments, the partnerships. What else is on their strategic agenda?
Well, user acquisition and engagement are definitely major priorities for them.
Okay, so they're always thinking about growth.
Oh, yeah. They're constantly working to attract new shippers and truckers to their platform, and more importantly, keep them coming back for more.
Right. It's not enough to just get them on the platform. You have to keep them happy and engaged.
Exactly. And they highlighted some of their membership programs for shippers, which offer things like discounted rates, priority matching, and enhanced support.
So it's all about building that loyalty and creating those sticky users.
It is. And for truckers, they mentioned using tiered incentive strategies to reward their highest performing truckers with perks like access to premium cargo bids. It's about creating a win-win for everyone involved.
Yeah, the more users they attract, the more valuable the platform becomes for everyone involved.
Exactly. That network effect we were talking about earlier.
Right, creating that virtuous cycle. Okay, so we've talked about their tech investments, their partnerships, and their focus on user growth. What about their financial strategy? Any insights there on how they're managing their money?
Well, we already touched on their decision to shift away from that freight brokerage business and really focus on their higher margin transaction services.
Right, they're doubling down on their core strength, the platform, and where they can generate the most profitable growth.
Exactly. And they're also being very disciplined with their costs, streamlining their operations, finding ways to just do more with less.
That's always a good sign. Shows they're not just chasing growth for the sake of growth, but really trying to build a sustainable business for the long haul.
Exactly. And that careful approach is also reflected in their decision to start paying a semi-annual dividend.
Wait, they're paying dividends already? I
Yeah.
thought that was something that more mature companies did.
Well, it's definitely a bold move for a fast-growing tech company, but it signals their confidence in their financial position and their commitment to rewarding those shareholders.
Interesting. So they're generating strong cash flow, investing in growth and returning value to shareholders.
That's the trifecta.
Sound like a pretty good combination.
Yeah.
But, it's important to remember that every investment has risks.
Oh, absolutely.
We've talked about some of the macroeconomic and competitive challenges they face, but you never know what unexpected events might pop up.
Right, whether it's regulatory changes, supply chain disruptions, or just those sudden shifts in the market, Investing always comes with a degree of uncertainty.
No one has a crystal ball.
Mm.
But based on what we've heard on this earnings call, Full Truck Alliance seems to be taking all the right steps to try to mitigate those risks and position themselves for success over the long term.
I agree. They have a clear vision, a solid track record, and a real commitment to innovation. It will be interesting to see how their story continues to unfold.
Yeah, for sure. Speaking of interesting, I think it's time for This Is Not Financial Advice.
Let's get those creative juices flowing.
All right, so hit me with your most out-of-the-box trade idea. What's something that could potentially capitalize on Full Truck Alliance's strengths?
Okay, so given their focus on artificial intelligence and all that data they have on the Chinese trucking industry, how about a trade that bets on them becoming a major player in the autonomous trucking space?
Ooh, I like that. It's a long-term play for sure, but it's a fascinating idea to think about.
Right. They already have the network, the data, and the tech expertise.
Imagine if they leveraged all of that to become the go-to provider for autonomous trucking solutions in China.
Exactly. They could partner with self-driving vehicle developers, invest in their own autonomous driving technology, or even just buy a smaller company that's already doing it.
It's like a whole new world of possibilities.
Yeah.
And to make this trade even spicier, you could add a call option on a Chinese electric vehicle manufacturer that's also really invested in autonomous driving.
Now we're talking, you're betting on the convergence of several major trends, the rise of autonomous trucking, the electrification of transport, and Full Truck Alliance's strategic positioning to capitalize on all of it.
It's a multi-layered play. But remember, folks, this is all hypothetical.
Purely hypothetical.
We're just exploring possibilities and having a little fun.
Right. This is not financial advice.
Not at all.
Yeah.
Always do your own research and talk to a qualified financial advisor before making any investment decisions.
Couldn't agree more.
But it's fun to dream big, isn't it?
It is. Okay, so we've had some fun with that hypothetical trade. Now, let's come back down to earth for a moment and talk about some of the key metrics investors should really be watching as they evaluate Full Truck Alliance.
Yeah, let's get back to basics.
It's easy to get caught up in all the excitement, but at the end of the day, the numbers really do matter.
Right. It's easy to get caught up in the excitement of all these big ideas, but you're right. At the end of the day, the numbers are what really matters.
Exactly. So let's talk about those key metrics that investors should be watching as they evaluate Full Truck Alliance.
Yeah. What should we be paying close attention to?
Well, first and foremost, keep an eye on their fulfilled order growth. That's a really fundamental indicator of how much their platform is actually being used and their ability to attract both shippers and truckers.
Right. Volume is king in this business. The more shipments they're handling, the better.
Exactly. And something that's closely related to that is their fulfillment rate. You know, the percentage of posted orders that are actually completed a higher fulfillment rate means greater efficiency, happier customers, and ultimately more revenue.
So we want to see both of those metrics moving in the right direction over time.
Absolutely. Another key metric is their monetized order penetration ratio.
Yeah, we touched on that earlier.
Right. It basically tells us how good they are at converting their services into actual revenue. And we saw a pretty big jump in that ratio this quarter, which is definitely a positive sign.
Right. It means they're not just facilitating those shipments. They're actually making money from them.
Yeah.
Which is crucial for any business, but especially for a platform like Full Truck Alliance.
Exactly. And speaking of revenue, investors should also pay close attention to the growth of their transaction service segment.
Yeah, that's their bread and butter.
Right. That's where they're making the most profit. So we want to see that segment continue to outperform.
So we've got fulfilled orders, fulfillment rate, monetized order penetration, and transaction service revenue growth.
Those are the big ones to watch.
Those are the key drivers. And of course, we should always keep an eye on their profitability metrics like adjusted operating income and net income. We want to see steady growth in those numbers, which indicates they're managing their costs effectively and generating those sustainable profits.
Right. Growth is great, but it needs to translate into real earnings eventually.
Absolutely. And finally, it's worth tracking their dividend payments. They've just started paying a semi-annual dividend, which could make them more attractive to some income-focused investors.
Okay, so a lot to keep track of, but these are all important pieces of the puzzle when you're evaluating Full Truck Alliance.
It's all about putting those pieces together and forming your own informed investment thesis. And as always, we're here to help you make sense of it all. But before we wrap up this deep dive, we have to indulge in one last round of This Is Not Financial Advice.
All right, let's get wild one more time.
Hit me with your most outrageous yet plausible trade idea based on what we've learned about Full Truck Alliance today.
Okay, so what if Full Truck Alliance isn't just content with disrupting the logistics industry? What if they set their sights on something even bigger?
Okay, I'm intrigued. What do you have in mind?
What if they leverage their massive trucking network and all that data they have to enter the financial services market?
Whoa, that's a big leap. How could they pull that off?
Well, think about it. They have so much information about millions of truckers and their financial flows. They could offer services like loans, insurance, or even payment processing that are tailored specifically to the needs of the trucking industry.
That's actually brilliant. They could become the go-to financial services provider for that whole trucking ecosystem.
Exactly. And they could even partner with existing financial institutions to leverage their expertise and infrastructure.
To make this trade even more exciting, you could buy call options on a fintech company that specializes in serving underserved markets, betting that Full Truck Alliance might just acquire them down the line.
Now you're thinking like a true talk ticker, but remember, folks, this is all purely hypothetical.
Right. We're just having some fun exploring the what-ifs.
This is definitely not financial advice.
Hey, always do your own research and talk to a qualified financial advisor before making any investment decisions.
Couldn't agree more, but it's fun to dream big, right?
Absolutely. So there you have it, folks, our deep dive into Full Truck Alliance's Q4 2024 earnings call. They're a company that's not only meeting the challenges of today, but also looking ahead to shape the future of their industry and maybe even beyond.
It's a fascinating story that we'll definitely be following closely.
And as always, we'd love to hear your thoughts. Connect with us on social media and let us know your questions, comments, or even your own wild trade ideas.
Let's keep the conversation going. That's what Talk Tickers is all about.
Until next time, happy investing. And remember, this is not financial advice.
See you next time.